Introduction. Fix your mindset. Fix your trading. Let's be honest. Have you ever told yourself, next time I'll follow my rules, only to break them again the moment the market moved? Maybe you closed too early. Maybe you chased a loss. Maybe you froze and watched your plan fall apart. Then you sat there thinking, why do I keep doing this? Here's the truth. You don't need more strategies. You already know enough. It's your mindset that's messing with your trades. Most traders don't lose because they're stupid. They lose because they can't control their emotions. They panic, they overthink, they sabotage themselves, and they repeat the cycle. This book is here to stop that cycle. It's not about charts or fancy indicators. It's about what really matters: staying calm under pressure, sticking to your plan, becoming the kind of trader who doesn't just know what to do, but actually does it. Because once you fix your mindset, the profits follow. So if you're tired of trading in fear, breaking your own rules, and feeling stuck, this book is your reset button. Read it with an open mind. Apply it with purpose. Let's start.
Chapter 1. The Inner Market. Before you master charts, master yourself. Have you ever noticed how your best trades happen when you're calm, focused, and emotionally detached? And how your worst ones usually show up right after you're excited, scared, or trying to make something happen? That's not a coincidence. That's your inner market at work. Most people come into trading thinking it's all about strategy. They spend hours studying indicators, watching YouTube videos, paying for signal groups, and backtesting until their eyes bleed. And don't get me wrong, strategy matters. Technicals matter. Risk management matters. But here's the truth most traders don't realize until they've lost thousands. The real market isn't just on the screen, it's inside your mind. What goes on in your thoughts, emotions, and internal dialogue shapes every decision you make. Your beliefs, your fears, your ego, your childhood patterns, even how your parents talked about money, it all bleeds into your trading whether you know it or not. Let me show you how. The trade behind the trade. Let's say you're looking at a perfect setup. Price is approaching a key level, momentum looks great, you've seen this exact structure work before. But then you hesitate. You start thinking, what if this one fails? What if I lose again? I can't afford another red day. So instead of entering confidently, you wait. The market moves without you. Now you feel frustrated. You chase it late. Boom, loss. Now you're mad at yourself. Why did I do that? I knew better. And then you take another trade. Not because it's part of your plan, but because you want to get your money back. That's not technical analysis anymore. That's emotion. That's inner chaos. That's your mindset hijacking the trade. The chart didn't do that. You did. And if you've been trading for more than a few months, you know this happens all the time. That's why I want you to understand something powerful. Every trade has two parts: the setup and the psychology behind it. Most traders only focus on the setup. The best traders master both. Your beliefs equal your results. Your trading results don't start with your broker. They start with your beliefs. If you believe money is hard to make, you'll subconsciously sabotage your profits. If you believe you're bad with money, you'll find a way to lose even when you're up. And if you believe every loss is personal, you'll treat each red trade like an attack on your identity. And if you believe trading is a way to prove yourself, your ego will always be on the line. Your brain doesn't work in isolation. It runs on the software you've downloaded over your entire life. That includes your relationship with success, failure, money, risk, and even identity. For example, some traders self-sabotage as soon as they start winning. Why? Because deep down, they don't feel worthy of success. So their inner market pulls them back into familiar failure. Others can't take a loss calmly. One red trade ruins their entire mood. Not because the trade was that bad, but because they've linked loss with failure, shame, or even abandonment. These emotional patterns have roots far deeper than the chart. And until you identify them, you will keep repeating the same mistakes. Your mind is always trading. Even when you're not in a position, your mind is still active. You're thinking, should I enter now? Did I miss it? Maybe I'll just wait for news to come out. Oh no, it moved without me. Should I chase it? I knew it. I should have gotten in. I suck at this. All of that chatter is your inner market. It's what creates anxiety, hesitation, overconfidence, and fear. It's what makes you exit early, revenge trade, or sit out a perfect setup. And most importantly, it's what separates amateurs from professionals. See, pro traders aren't superhuman. They just don't let their thoughts run the show. They've learned to observe their inner market without reacting to it. They know when they're trading emotionally and when they're truly in control. And that level of self-awareness, that's a skill. It's not talent. It's not luck. It's trained, just like reading a chart. Trading is a mirror. Here's something most people never tell you. Trading will expose every weakness in your personality. If you're impatient in life, you'll be impatient in trades. If you crave validation, you'll chase it with profits. If you struggle with discipline, it'll show up in your risk management. If you run from discomfort, you'll avoid taking losses the right way. Trading is one of the purest mirrors in the world. It reflects exactly who you are without filter. That's why it's so hard. But it's also why it can be so powerful. Because every time you face the market, you're also facing yourself. And if you're brave enough to work on the person behind the screen, your trades will start to change in ways you never imagined. Start with awareness. Let me ask you a simple question. Do you know how your emotions affect your trades? Not just in theory, but in real time. Can you recognize when you're trading from fear versus confidence? Can you tell when your ego is driving the trade? Can you spot the moment when you start justifying a bad entry? If not, that's where your work begins. The first step to mastering your inner market isn't trying to fix yourself. It's simply noticing what's going on in your head. Most traders don't do that. They jump from trade to trade without ever checking in on themselves. But if you start observing your thoughts the same way you observe price action, you'll gain something more powerful than any setup. Clarity. Clarity creates discipline. Discipline creates consistency. And consistency is what builds real trading success. Detachment is a superpower. You know what emotional trading feels like. Heart racing, sweaty palms, quick decisions, regret 5 minutes later. But you also know how it feels to be in the zone. Calm, clear, almost robotic. What's the difference? Detachment. When you detach from the outcome, your mind stays free. You're not trading to win. You're trading to follow your process. You're not reacting to every candle. You're waiting for your edge. You're not trying to force a profit. You're letting the market come to you. This level of detachment doesn't mean you don't care. It means you care about the right things. The plan, the execution, the risk, the process. Because when you obsess over the outcome, you lose control. But when you focus on the process, the outcome takes care of itself. The most valuable chart is you. You can study indicators all day. You can memorize price patterns and candle formations. But none of that will matter if your mind isn't steady. You are the most important chart in your trading career. And the more time you spend understanding your inner market, the more profitable your outer trades become. So here's your challenge for today. Before you analyze your next setup, analyze yourself. Ask, what am I feeling right now? Am I trying to force a trade? Am I thinking clearly or emotionally? Am I trading from fear or from discipline? This small habit can change everything.
Chapter 2. Why Most Traders Lose. It's not the strategy, it's the psychology. Let's face it, if trading was purely about strategy, we'd all be rich. There are thousands of proven strategies out there. Thousands. Price action, moving averages, Fibonacci, order blocks, volume profiles, supply and demand zones, smart money concepts. The list is endless. Many of them work. Some work better than others. But the truth is, strategy is not why most traders fail. Let me say that again. It's not the strategy, it's the psychology. We've all seen it happen. Maybe you've even experienced it yourself. You find a strategy that makes sense. It works on paper. It works in backtests. You win a few trades and build some confidence. Then, one bad day happens. You break the rules. You chase losses. You double your position size out of emotion. And in just a few hours, your entire account takes a hit you weren't prepared for. And here's the kicker. It wasn't the market. It wasn't your edge. It was you. It's not the market that kills you. It's you. The number one reason traders fail is because they don't understand what game they're actually playing. They think trading is about finding the right trade. It's not. It's about executing your plan without breaking down mentally. You can have a strategy with a 70% win rate and still blow your account if your psychology is weak. You'll cut winners early. You'll let losers run. You'll size up too big after a win and double down after a loss. You'll jump from one strategy to the next every time you hit a rough patch. The market isn't out to get you. It doesn't even know you exist. It's not personal, but your reaction to it is. Most traders aren't losing because they don't know what to do. They're losing because they can't make themselves do it consistently under pressure. Impatience, the silent killer. Let's start with the most common reason traders fail. Impatience. Trading looks fast from the outside. Charts moving every second, people flipping positions on social media, influencers showing massive daily profits. It creates this illusion that trading should be fast, that the more you do, the more you make. But that's a trap. The best traders are patient assassins. They wait. They let the market come to them. They skip low-quality trades. They might take just 1 or 2 setups a week and still outperform everyone else. Impatient traders, on the other hand, try to trade everything. They can't sit still. They get anxious when the market is quiet. They feel like they're missing out if they're not in a trade every hour. So they force setups. They enter too early. They exit too soon. And worst of all, they turn their edge into a guessing game. Impatience is dangerous because it doesn't just kill your trade, it breaks your discipline. And once that breaks, everything else starts falling apart. Fear, the invisible hand that pushes you. Fear shows up in many forms in trading. Sometimes it's fear of losing money. Sometimes it's fear of being wrong. Sometimes it's fear of missing out. And sometimes it's just fear of regret. Have you ever seen a perfect setup but hesitated to take it? You tell yourself, let me wait for one more confirmation. But deep down, you're just scared. Maybe your last trade was a loss and now you're gun-shy. Or maybe you've lost confidence in your system. Fear causes hesitation. Hesitation causes missed trades. Missed trades cause regret. Regret causes revenge trading, and that's where everything spirals. Fear is also why traders exit winning trades too early. You get into a great trade, it moves in your favor, and suddenly your brain screams, take the profit now before it reverses. So you close it. Then the market keeps going exactly where you thought it would, and now you're upset. But here's the irony. Fear doesn't protect you, it traps you. It shrinks your trades, it clouds your judgment, it turns you into a reactive trader instead of a planned one. And as long as fear is driving your decisions, you're not trading. Fear is. Revenge trading, the destruction button. Every trader has experienced this at least once. You take a loss, a painful one. Maybe it wasn't even supposed to be a big deal, but for some reason it stings more than usual. And before you know it, your entire focus shifts. You're no longer thinking clearly. You're thinking emotionally. You're angry, frustrated, embarrassed. So you say, I'll get it back. You take another trade, not because it meets your criteria, but because you need to win. You want revenge. You want to feel better. You want to erase the pain. And boom, another loss. Then another. Within an hour, you've broken every rule in your plan. Your stop loss is wider. Your lot size is bigger. Your emotions are driving everything. You're not trading a setup anymore. You're trading your ego. This is revenge trading. It's one of the most toxic behaviors in the game. And the worst part? You know it's happening while it's happening, but you feel powerless to stop it. Why? Because you're no longer in control. Your nervous system is. You're in a fight or flight state. Your brain isn't thinking logically, it's trying to fix an emotional wound by forcing a win. But here's the truth. No revenge trade ever feels worth it in the end. It always leaves more regret than relief. Overconfidence, the sneaky saboteur. After a few wins, it's easy to start feeling invincible. You think, I've figured it out. You feel like you're in the zone. You start taking more trades. You start skipping confirmations. You increase your risk. And then the market humbles you. Overconfidence is just as dangerous as fear, maybe even more. Because it tricks you into thinking you're untouchable. It tempts you to abandon the very rules that got you the win in the first place. One of the hardest things in trading is learning to stay humble during a winning streak and calm during a losing one. Most people can't do either. They go from feeling like a genius to feeling like a fraud in a matter of hours. But here's what pros know. Trading isn't about how good you are on your best day. It's about how consistent you can be every day, regardless of outcome. Overconfidence leads to risk creep. Risk creep leads to blown trades. And blown trades, well, they destroy months of progress in minutes. Mental noise, the invisible chaos. Your thoughts can either be your greatest asset or your biggest liability. The average trader's brain is running on overdrive during market hours. There's constant noise. What if this reverses? Should I close now or wait? I knew I should have entered earlier. What if this is the breakout? Oh no, it's going against me. Maybe I'll just hold. This inner chatter is exhausting. It distracts you. It builds anxiety. It creates analysis paralysis. And worst of all, it keeps you from making clear, confident decisions. Successful traders learn to quiet the noise. They trust their system. They journal their emotions. They stay grounded. They don't let every candle trigger a new wave of panic or hope. Mental clarity is a competitive edge. If your mind is cluttered, your trades will be too. The real reason most traders lose. When you zoom out, you realize something powerful. Most traders don't lose because of bad setups. They lose because they lack self-control. They don't lose because the market is unfair. They lose because they let emotions dictate behavior. They don't lose because of the strategy. They lose because they can't execute it when it matters most. This is why psychology is the foundation of trading success. You can always improve a system, but if you don't master yourself, no system will ever work consistently. And here's the truth. Most people don't want to hear that. They want a shortcut. They want to believe that the next course, next guru, next signal will finally be the thing that saves them. But nothing external will save you until you fix what's happening internally. The market is ruthless to the emotionally undisciplined and endlessly generous to the mentally prepared. So what can you do? You don't need to be emotionless to be a great trader. You just need to become aware. Start noticing when your emotions are taking over. Pause before placing a trade and ask yourself, am I following my plan or reacting to something? Don't trade when you're stressed, tired, or angry. Don't chase losses. Don't trade to feel better. Trade because the setup is there, the risk is right, and your mind is calm. Your job is not to be right all the time. Your job is to protect your capital and stick to your edge. Wins and losses will come and go, but your discipline must stay. Final thoughts. If you're losing in the market, the first place to look is not your strategy, it's your psychology. Are you impatient? Are you trading to avoid a feeling? Are you trying to force the market to validate you? These questions are uncomfortable, but necessary. Because the truth is, once you fix the real reason.
Chapter 3. Emotions are your biggest positions. Fear and greed aren't just buzzwords, they're your real competitors. Let me ask you something real. Have you ever stared at a chart and felt your heart rate go up, not because of what the market is doing, but because of what your mind is doing? Have you ever opened a trade with full confidence and then 5 minutes later felt pure panic for no logical reason? Or worse, have you ever taken a completely random trade just because you felt like you had to make something happen? If you have, welcome to the real game of trading. This is where most of the money is made and lost. Not on the charts, but in your head. The sooner you understand that trading is not a battle between bulls and bears, but between discipline and emotion, the sooner you'll stop losing in ways that feel totally irrational. Because here's the truth no one tells you. Your emotions are your biggest open positions. Bigger than your lot size, bigger than your leverage, bigger than any support resistance line on your screen. Fear, greed, hope, regret, these aren't just feelings. In trading, they are positions, and the traders who don't know how to manage them get liquidated by their own psychology. You're not trading the market, you're trading your reactions to uncertainty. The market gives you information. Your brain translates that information through an emotional filter, and then you respond. That response determines your fate, not the market movement, not the news, not the setup, just your ability to respond in a calm, planned, and consistent way. But let's be honest, most of us weren't trained to deal with this kind of pressure. Most of us weren't raised to stay calm when money is on the line. When something you believed would happen doesn't, when price goes against you, when a profit becomes a loss in a blink, our default is emotional. And if you don't become aware of those emotions, if you don't learn how to spot them and manage them, they will manage you. Fear, the invisible risk manager. Fear is probably the first emotion every trader meets. It shows up early and often. It's that tight feeling in your stomach before pressing buy. It's that voice saying, what if this goes wrong, even though your setup is perfect? Fear causes hesitation, and hesitation causes missed opportunities. You see a setup, but your last trade was a loser. You hesitate, price moves without you. You miss it. Now you feel regret. That regret leads you to take the next trade too quickly, one that's not even in your plan, just so you don't feel like you're missing out again. Fear isn't just about losses. It's also about the fear of losing profits. You're in a good trade, it's going well, but suddenly fear whispers, what if it reverses? You close early. You take less than your plan says. Then you watch the price hit your original target and feel frustrated. Not because the trade lost, but because you lost control. Every time you let fear override your plan, you're not just damaging your profit potential. You're building a dangerous habit, training yourself to make emotional decisions instead of rational ones. Fear doesn't protect you. It restricts you. It keeps you playing small. And in trading, small thinking leads to slow bleeding. Greed, the illusion of control. Now let's talk about greed, fear's twin brother. If fear says, get out before you lose, greed says, stay in until you get more. Greed usually appears right after a few wins. You feel good. You feel smart.
You feel like you're finally getting it. And then you think, if I just increase my lot size, I could make even more. You start overtrading. You overleverage. You take low-quality setups because they could work. You hold too long, hoping for that one big winner. And sometimes it works, but most of the time it doesn't. Greed doesn't just make you reckless. It makes you irrational. You start looking for hope instead of confirmation. You start forcing outcomes instead of letting them unfold. You're no longer trading probabilities. You're trading desires. And the market doesn't care about your desires. Greed tricks you into believing that more risk equals more reward. But real traders know that more risk without discipline equals faster destruction. Greed whispers, double down. Wisdom whispers, stick to your rules. Who you listen to will decide how long you stay in this game. Hope is the most dangerous emotion in trading. Hope is not a trading strategy. In fact, hope might be the most dangerous emotion in your trading journey. Why? Because hope disguises itself as positivity. It feels innocent. It feels optimistic. But in reality, hope often shows up when you're refusing to accept reality. Your trade is going against you. The setup is invalidated. Your stop should have been hit, but you move it. You say, let me just give it a little more room. Maybe it'll come back. That's not discipline. That's denial. You're no longer trading your edge. You're gambling with your emotions. You're holding a losing trade not because it makes sense, but because you hope it'll reverse and save you. Hope turns small losses into big losses. It turns one mistake into a blown account. The most successful traders are not the most hopeful. They are the most honest. Honest about when they're wrong. Honest about what the market is doing. Honest about their own limits. Hope feels good until it destroys everything you've built. Regret, the emotional hangover. Regret is the emotion that shows up after the damage is done. You closed too early. You didn't enter when you should have. You sized too big. You ignored your plan. You broke your rules. You knew better, but you didn't do better. And now the trade is over and the mental beating begins. Regret is the hangover of bad decisions. It lingers. It haunts. It steals focus from the next opportunity because you're too busy punishing yourself for the last one. But here's something you need to understand deeply. Regret is only useful if you learn from it. If regret makes you reflect, great. If it makes you spiral, you're giving it too much power. One of the biggest mindset shifts you can make as a trader is this: detach from outcomes attached to behavior. You can lose money and still feel good if you followed your plan. You can make money and still feel bad if you broke your rules to get it. In this game, your consistency matters more than your P&L, because consistent behavior creates consistent results. Emotions aren't the enemy. Unmanaged emotions are. Let's be clear, you can't eliminate emotions. You're human. You will feel things when real money is on the line. You're supposed to. The goal isn't to become a robot. The goal is to become a master of your emotional responses. What pros do better than anyone else is pause. They don't rush. They don't react impulsively. They observe their emotions. They use their emotions as information, not as commands. They know when fear is speaking. They know when greed is tempting. They know when hope is blinding. And they don't fight these feelings. They recognize them, breathe through them, and still make the disciplined choice. Discipline doesn't mean you don't feel emotions. It means you don't let emotions make your decisions. Building emotional resilience. So how do you actually build this kind of emotional control? First, awareness. You can't fix what you don't notice. Start journaling your trades, not just the entry and exit, but the emotions you felt during the trade. What were you thinking when you entered? What did you feel when it went against you? What did you tell yourself before you closed? Patterns will emerge. You'll start to see how often your trades were influenced by emotion rather than logic. Number 2, create structure. A solid, written trading plan gives your brain something to fall back on when emotions try to hijack your process. If it's not in the plan, it's not allowed. Simple as that. Number 3, manage risk properly. Many emotional blow-ups come from oversized positions. You're not afraid of losing 1% of your account, but when you're risking 10% on a trade, of course your emotions go crazy. You're not built for that kind of stress. No one is. Keep your risk small enough that you can think clearly even during a loss. That clarity is worth more than any potential gain. And finally, give yourself grace. This is one of the hardest games in the world. You will mess up. You will act emotional. You will regret trades. That's part of it. But every mistake is a lesson if you're willing to learn.
Chapter 4. Kill the noise. Silence the world. Listen to your system. Have you ever felt like you're making the right decision until you open social media? You checked your charts, followed your setup, entered your trade, and then, bam! You open Twitter and some loud trader with 50K followers just posted, "Euro USD is gonna crash! Anyone still long is playing themselves." Suddenly, your confidence disappears. Your mind starts spinning. Wait, am I on the wrong side? You reanalyze. You doubt. You panic close. And then, like magic, the trade hits your original target. Sound familiar? That's noise. And if you don't learn how to kill it, it will kill your progress. Noise is the silent killer of focus. Most traders don't lose because they lack strategy. They lose because they lack clarity. Clarity isn't just about having a plan. It's about protecting your mind from everything that distracts you from that plan. Let's be honest. Trading today is noisy. You're surrounded by tweets, Telegram signals, Discord chats, YouTube breakdowns, breaking news, indicator gurus, macro analysis, micro analysis, and people screaming, "Buy the dip!" 24/7. It's never been easier to hear 100 voices telling you 100 different things in under a minute. And the human brain wasn't built for that kind of input. Our brains crave certainty, but the more information we consume, the less certain we become, because the voices rarely agree. That's the trap. Information feels like intelligence, but too much of it turns into confusion. This is where traders die, not from a lack of effort, but from a lack of silence. You're not confused because you're dumb. You're confused because you're overwhelmed. That's why killing the noise isn't optional. It's survival. You don't need more information. You need more focus. Let this sink in. Most traders are not under-informed. They are over-informed and under-focused. They collect strategies like Pokemon cards. They follow 5 different traders. They flip between indicators, strategies, time frames, even asset classes, all within a single session. Why? Because they think more information equals more edge. But the opposite is often true. The more voices you listen to, the further you drift from your own process. Every time you consume someone else's idea, you risk diluting your own system. Trading is not about knowing everything. It's about doing one thing consistently. That means you don't need a better indicator. You need a better filter. One that says, this is my system. This is what I trust, and everything else is noise. If you can't block out distractions, you'll be manipulated by the market and by other traders' opinions. That's 2 levels of noise you're battling, not just the chart, but the crowd. And crowds are emotional. They don't care about your plan. Noise feeds FOMO, doubt, and self-sabotage. One of the most dangerous emotions in trading is FOMO, fear of missing out. And noise feeds FOMO like oxygen feeds fire. You're chilling, following your rules, and then you check your phone and see gold just pumped 200 pips in 5 minutes. You weren't in the trade. Now your brain goes into overdrive.
Why wasn't I in? I knew it. Maybe I should jump in now. Boom. You take a late entry, price reverses, loss. Now you're not just down money, you're down confidence. That trade had nothing to do with your system. It was born from noise and fueled by fear. And the cycle repeats. You doubt your process, you chase the next shiny thing, you start questioning your edge, you bounce between strategies, you follow people who seem smarter than you. Before you know it, you're not trading anymore. You're reacting. You've become a puppet on the strings of public opinion. That's not trading. That's self-sabotage disguised as hustle. The loudest people on the internet are often the worst traders. Most successful traders are quiet. They're focused. They don't have time to post every 5 minutes. They're too busy managing risk, refining their edge, reviewing their trades, and improving themselves. Meanwhile, the loud ones are posting screenshots, calling tops and bottoms, offering free signals, and claiming 90% win rates. It's seductive, it's exciting, but it's also fake. You're chasing ghosts. You're comparing your real journey to someone's edited highlight reel. If you want peace, unfollow the noise. You don't need 10 gurus. You need one method you believe in, and the discipline to stick to it when everyone else is shouting something different. Trust your process, or get pulled by others. One of the hardest things to do in trading is trust yourself, especially when you're new, especially when you're not seeing consistent results yet. But here's the paradox. You will never see consistent results if you don't give your process time to work. Noise makes you flip strategies too quickly. You take 3 losses and jump ship. You follow someone else's system that doesn't even match your personality. You keep changing, adapting, tweaking, but never sticking. You're building sandcastles and wondering why they wash away. Your system, whatever it is, needs time. It needs data. It needs review and refinement. But most importantly, it needs space. Space from external opinions. Space from flashy wins posted by random accounts. Space from signals that don't match your plan. You can't optimize your own voice if you're constantly listening to others. The great traders don't just build systems. They build silence around them. News isn't your friend. It's fuel for panic. Let's talk about another type of noise, the news. Many traders feel like they need to be in the know. They check every economic release. They analyze every tweet from a central banker. They treat every headline like a signal. But here's the truth. By the time news hits your screen, the market has already moved. Institutional traders have faster feeds. Algorithms are reacting in milliseconds. You're always behind. And even if you could react fast enough, news doesn't always move markets logically. How many times have you seen great news and the price still drops? Or bad news and the market rallies? That's because price isn't driven by the news itself. It's driven by expectations, positioning, and psychology. If you base your trades on headlines, you're playing a game you don't understand. You're not informed, you're being baited. Kill the news. Follow the chart. Trust your edge. Silence is a trading skill. Now, let's flip the narrative. Silence is not emptiness. It's not ignorance. Silence is a skill, one of the most valuable skills you can build as a trader. Silence creates space for logic to operate. It gives your mind room to breathe. It makes discipline possible. In silence, you hear your strategy more clearly. You remember your rules. You stop chasing and start executing. This is the secret of top traders. They don't just have better tools. They have less noise.
They've trained themselves to ignore distractions, mute chaos, and focus on what actually matters: behavior, edge, and execution. They know silence sharpens clarity, and clarity sharpens profits. Practical ways to kill the noise. Now that you understand the value of silence, here's how to build it into your trading life. First, unfollow accounts that trigger comparison, FOMO, or doubt. Your feed is your mental diet. Junk in equals junk out. Second, have a media blackout during your trading session. No news, no social feeds, no extra opinions, just your chart and your plan. Third, journal your thoughts before and after each trade. This creates emotional awareness and helps you filter noise from intuition. Fourth, trade fewer pairs or markets. Focus creates mastery. You don't need to watch everything, just master something. Fifth, take digital breaks. Don't let trading consume every waking hour. The more you refresh your mind, the better you trade. Sixth, remind yourself daily: I am here not to impress, I am here to improve. Silence is your edge. Protect it like capital. Final words. You started trading for freedom, but noise will rob you of that freedom if you let it. It will make you anxious. It will confuse you. It will tempt you to abandon your path.
Chapter 5. The Discipline Dividend. Consistency is sexier than signals. Let me ask you something real quick. How many times have you said, "I knew I shouldn't have done that," right after a trade? You had a plan, you made the rules. You even told yourself, "No trades during news," or "Only take trades after confirmation." And then you broke it again. Why? Because in that moment, you didn't need more knowledge, you needed more discipline. The painful truth is this: most traders don't fail because they don't know what to do. They fail because they can't make themselves do it long enough to win. That's why this chapter is so important. Discipline is the great divider. The line between gamblers and professionals, between burnout and breakthrough, between constantly starting over and finally compounding growth. If you want to build wealth in trading, don't chase better signals, build better self-control. Because in this game, discipline pays better than any setup. Discipline is the bridge between potential and profit. Every trader starts with hope. You've got a strategy you believe in. You've read the books, watched the YouTube channels, practiced in demo. Maybe you've even had some wins. But somewhere along the way, things fall apart. One day you overtrade. The next, you revenge trade. You start forcing trades when you're bored, or you exit too early because of fear. Or worse, you break all your rules after one bad day because you just want to make it back. And suddenly, you're in the same cycle. Hope to hustle, to emotional trade, to regret, to reset. Over and over again. That's what lack of discipline looks like. You're not failing because your system sucks. You're failing because you haven't committed to the boring consistency required to let it play out. Discipline is the bridge between knowing what to do and actually profiting from it. Until you walk that bridge, your potential will stay potential and never become profit. Boring is beautiful. Most people want trading to be exciting. They crave big moves, big wins, perfect entries, dramatic exits. But guess what? The best traders are boring. They do the same thing, the same way, every single day. They don't need excitement. They want consistency. To them, a great day is one where they stuck to the plan, not one where they hit some massive lottery-style win.
Think about it. Would you rather make $1,000 once in a random lucky trade or $100 a day for the next 30 days by following your system? That's $3,000 in disciplined earnings versus $1,000 in ego-driven gambling. It's not even close. The market rewards boring repetition. It rewards those who can trade without needing a dopamine hit. It rewards those who can do the right thing even when it feels dull. And that's hard, because we live in a world addicted to stimulation. We scroll, we binge, we chase. We don't sit still. And that habit shows up in our trading. So, to be a disciplined trader, you have to retrain your brain. You have to fall in love with boring, because boring is what pays. Discipline means saying no a lot. Here's something most people won't tell you. Good trades are rare. Great trades are even rarer. That's why discipline isn't just about doing the right thing. It's about having the strength to not do the wrong thing. You'll sit in front of your screen and see all kinds of maybes. Maybe this will break out. Maybe this reversal is real. Maybe this setup will still work even if it's a little early. Maybe I'll just risk more this time to make it back. All those maybes are landmines. A disciplined trader doesn't trade maybe. They wait for yes. That means you'll need to learn how to sit still. How to watch a setup pass you by and not chase it. How to take a loss without trying to instantly fix it. How to feel uncomfortable and do nothing anyway. Saying no is one of the most powerful skills in trading. No to noise, no to impulse, no to boredom trading, no to emotional decisions, no to ego-driven revenge. Every no protects your edge. Every no buys you more time to say yes to the right opportunity. The market will always tempt you to trade more. Your job is to say no until your system says yes. Why most traders quit before they win. Here's a painful truth. Most traders who quit were this close to breakthrough, but they didn't stick around long enough to see it. Why? Because they didn't have discipline. They couldn't do the boring, repeatable work of testing, refining, and executing the same system again and again. They wanted fast results. They wanted to fix everything with a new indicator or someone else's strategy. And when that didn't work, they gave up. This is the cost of undisciplined thinking. You're always looking for the shortcut. You're always restarting. You're never giving your process time to work. Discipline isn't about being perfect. It's about being patient. It's about saying, this is my system. I trust it. I will give it 50, 100, 200 trades before I even think about tweaking it. You wouldn't go to the gym once and expect a six-pack. You wouldn't plant to see it and dig it up the next day to see if it's growing. So why treat trading any different? You have to stay long enough for your edge to show up. You have to stay long enough to let compound discipline build compound returns. Discipline is a daily choice, not a one-time fix. You don't achieve discipline. You practice it. Every single day, the market will test you. And every single day, you have to choose react emotionally or respond logically. Discipline isn't motivation. It's not a feeling. It's a commitment to yourself, especially on the days when nothing feels right. You will not always feel like waiting. You will not always feel like journaling. You will not always feel like following the rules. But if you only do those things when you feel like it, you'll never become consistent. Discipline is built in the moments when you don't want to follow the plan, but do it anyway. That's when growth happens. Not when it's easy, when it's hard. Your edge is worthless without discipline. Let's say you have a system that wins 60% of the time. You risk 1% per trade. Your average win is 2R. You've backtested it. You've journaled it. It works. But what happens if you don't follow the rules? You enter early. You cut winners short. You hold on to losers longer. You over-leverage once in a while. You revenge trade every few losses. Guess what? Your 60% edge just became a 40% liability. It doesn't matter how powerful your system is. Without discipline, your edge dies in execution. Execution is everything. The market pays you not for what you know, but for what you consistently do. So stop obsessing over strategies and start obsessing over execution, because that's where the real money is made. Build systems that support discipline. Now, let's get practical. Discipline doesn't mean you have to fight your willpower every day. Smart traders build environments that make discipline easier. You set clear rules for entry, stop loss, and take profit. You use alerts so you're not glued to the screen. You journal every trade, wins and losses. You trade at fixed times, not all day. You schedule breaks. You use screen time limits. You have routines before and after the session. These aren't hacks, these are guardrails. They protect your process from your impulses. Discipline isn't about being stronger than everyone else. It's about designing your trading like a professional, even if no one's watching. Because that's what real pros do. They don't trust their mood, they trust their structure. Discipline makes you dangerous. When you become truly disciplined, you become dangerous, not to others, but to your old self. You're no longer swayed by panic. You're no longer seduced by shiny new strategies. You stop overtrading. You stop gambling. You stop needing validation from others. You stop needing to fix yourself after every loss. You become calm, consistent, focused. And that's when the market starts respecting you. Because the market punishes desperation, but rewards discipline. You'll find yourself whole.
Chapter 6. Trust the process, not the outcome. Winning traders think in probabilities, not predictions. Let's be honest. How many times have you placed a trade, watched it go against you, and immediately thought, why does this always happen to me? Or worse, when a trade wins, you think, I'm finally getting good at this, only to lose the next 3 trades and spiral back into self-doubt. If you're nodding, you're not alone. This roller coaster of emotions is exactly what ruins more traders than bad strategies ever will. And here's the core problem. You're way too obsessed with the outcome. You're focusing on whether a trade wins or loses, instead of focusing on whether you followed the plan. And that, my friend, is where your entire trading psychology starts to crumble. To become consistent, you must rewire your mind to detach from results and reconnect with the process. Because in trading, the best decision doesn't always lead to the best outcome in a short term, and the worst decision can still give you a win. So if you judge everything based on results alone, you'll always feel lost. This chapter will fix that. The game of probabilities, not certainties. Here's something that might shake your world a little. You can do everything right and still lose. Read that again. You can wait for your setup, follow your risk management rules, execute perfectly, and still take a loss. Why? Because trading is probabilistic, not deterministic. That means you're playing a game where the odds play out over time, not every time. Think about a casino. They know their edge. Over thousands of hands, they're going to win. But in the short run, sure, players can hit lucky streaks. That doesn't shake the casino. They trust the process.
You have to think the same way. You are the house, not the gambler. If your system has an edge, your only job is to execute it the same way, every time, regardless of outcome. Because one loss means nothing. One win means nothing. What matters is what you do over the next 100, 200, 500 trades. That's where your edge shows up. Why outcome addiction destroys consistency. The moment you attach your emotional state to whether a trade wins or loses, you're setting yourself up for disaster. When you win, you feel high, invincible even, so you increase risk, you loosen rules, you get overconfident. When you lose, you feel low, maybe even ashamed, so you chase losses, you question your system, you doubt yourself. This creates a dangerous loop where every result feels personal. But here's the truth. Your last trade is not a reflection of your identity. It's just one data point in a long sequence. Imagine a basketball player missing a single shot. Does that mean they're a terrible player? Of course not. It's just part of the game. Same in trading. But when you're outcome-focused, you make emotional-fueled decisions. You force trades. You skip rules. You either avoid the market or try to dominate it, neither of which ends well. When you're process-focused, you detach from short-term noise and anchor yourself to long-term truth. You learn, you log, you grow. That's what separates winners from wrecks. Process thinking builds mental armor. Process thinking means you measure your performance not by did I win or lose, but by did I follow my system. You focus on the controllables. You review every trade to see if you executed according to your plan. You forgive yourself for losses that were part of the system. And you even critique wins that came from breaking the rules. Because the goal isn't to be right. The goal is to be consistent. And when you think like this, something beautiful happens. You stop riding the emotional waves of every single trade. Your mindset stabilizes. You stop chasing. You stop overanalyzing. You stop tying your worth to your profit and loss. This is when trading becomes calm, peaceful even. It's no longer a game of highs and lows. It's a game of execution and reflection. You become a professional, not a prisoner of outcomes. The ego trap. I knew it. Let's talk about the biggest liar in your trading journey, your ego. Every time you say, I knew it would drop, or I should have held longer, you're not being wise, you're being egotistical. Ego loves to rewrite the past. It tricks you into thinking that if you just trusted your gut more or ignored your system, you'd have made more money. This is dangerous. Because the more you reward gut feelings and punish system trades, the more you train your brain to ignore logic and follow emotion. The ego wants to win the moment. The disciplined trader wants to win the game. So kill the ego. Kill the need to be right. Fall in love with being consistent instead. Because over the long run, consistent execution beats inconsistent brilliance every single time. The myth of the perfect trade. So many new traders obsess over finding the perfect entry, the perfect exit, the perfect system, the perfect setup. But here's the truth no one tells you. There is no perfect trade. Even the best setups can fail. Even the worst setups can win. Perfection is an illusion. If you're constantly looking for certainty before pulling the trigger, you'll never take action. You'll always second-guess. You'll always miss opportunities. Professional traders understand this. They don't aim for perfection. They aim for repeatability. They know their edge. They've accepted that not every trade will work, and they're okay with that because their process is built to win over time. When you let go of perfection, you free yourself from fear. And in that freedom, your best trading begins. Trusting the process means trusting yourself. Here's where it gets real. Most traders don't actually trust the process because they don't trust themselves to follow it. They doubt their ability to stay consistent. They sabotage good systems because deep down, they don't feel worthy of success, or they don't believe they're disciplined enough, or they don't believe they can win long term. So what do? They keep changing systems. They keep tweaking rules. They chase signals from gurus. They overcomplicate everything just to avoid responsibility. But here's the shift you need to make. Stop outsourcing your confidence to results. Build it from repetition. Trust isn't built by winning. It's built by doing. You trust yourself more every time you follow the plan, win or lose. You build confidence every time you execute without hesitation. You create emotional safety every time you journal and reflect without judgment. That's how you start trusting the process. Not by hoping, not by gambling, but by showing up the same way again and again until it becomes who you are. Zoom out. Think like a portfolio manager. Imagine you're managing a $50 million hedge fund. You have multiple strategies. You're trading on behalf of investors. You can't afford to throw tantrums after every loss. You think in quarters, in yearly returns, in overall risk exposure. You don't care about this trade. You care about the next 100. You know your job is execution, not emotion. That's the level of thinking you need to adopt even if you're just trading with $500. Because if you don't treat your small account with the same respect you'd give a big one, you'll never grow it into something bigger. Process-first thinking is what turns small traders into big ones. It's what keeps you grounded. It's what turns chaos into clarity. So zoom out. Stop trying to win today. Start trying to win this year. That's the mindset shift that transforms your trading. Journal like a scientist. Here's a practical tool that reinforces process thinking. Journaling. Not the fluffy Dear Diary kind, the cold, honest, analytical kind. What was your setup? Did you follow your rules? Why did you enter? How did you feel? Was your exit according to plan? Did you break structure? Why? This is where the magic happens, because journaling forces you to separate your decisions from the results. It helps you see patterns. It helps you track discipline. It helps you improve execution. And it gives you proof that the process works over time, even when your emotions tell you otherwise. The journal doesn't lie. The data is there. The truth is there. That's where real confidence is built, not by guessing, but by tracking.
Chapter 7. From FOMO to Flow. Stop chasing the market. Start syncing with it. Have you ever felt like the market is always one step ahead of you? You open your charts, see a setup forming, but hesitate, only to watch it fly without you. Then, on the next candle, you impulsively jump in, just in time for a reversal. You sit there, shaking your head, thinking, "Why does this always happen to me?" You're not alone. This experience is called FOMO, fear of missing out, and it's one of the most destructive forces in trading. It tricks you into thinking you're behind. It whispers that everyone else is getting rich. It makes you chase moves that are already over. And it always leaves you emotionally and financially drained. But what if there was a way to trade without chasing? What if you could shift from being reactive to being intuitive, moving with the market instead of after it? That shift is what we call flow. This chapter is all about learning to trade from a place of clarity, patience, and presence, where your actions are deliberate, your mind is still, and your performance improves not because you force the market, but because you finally align with it. Let's explore how to move from FOMO to flow and why it might be the most powerful mental transformation you ever make as a trader. The FOMO spiral, why you keep chasing. Let's understand what actually causes FOMO in the first place. FOMO isn't about greed, it's about insecurity. It's the fear that you're not doing enough, that others are doing better than you, that if you don't act now, you'll be left behind. It's the belief that opportunities are scarce and that this current one might be your only shot. This fear is especially intense in trading because the market moves fast. It's a 24/7 machine that never sleeps. Every second you're not in a trade, it feels like someone else is making money without you. So what do? You chase. You jump in late. You skip your process. You convince yourself that just this once it'll work out. And when it doesn't, you get frustrated. You promise to do better, but then it happens again. This is the FOMO spiral, a loop that drains your capital, destroys your confidence, and turns trading into an emotional roller coaster. You can't break this cycle by reading more indicators or tweaking your strategy. The root of the problem is not your system, it's your state of mind. You need to change how you feel when you're not in a trade. Flow, the opposite of FOMO. Flow is the mental state where your actions feel effortless, your mind is clear, and you're fully present in the moment. It's when you're so tuned in, you stop second-guessing, stop forcing, and just respond naturally to what the market is doing. Athletes call it being in the zone. Artists call it inspiration. Traders, we call it alignment. The rare but powerful moments when everything clicks. But here's the good news. Flow isn't luck. It's not a mystical accident. It's a trainable state. And it starts by letting go of the need to chase. When you stop trading out of fear, you create space for clarity. When you stop needing every trade to be the one, you gain patience. And when you trust your process, you allow your intuition to guide you, not your panic. The trader in flow doesn't look for trades. They let trades come to them. They're not scared of missing out because they know another opportunity is always around the corner. They don't need to force anything because they're synced with their plan, their rhythm, and their mindset. And that's exactly where you want to be. The inner shift, from scarcity to abundance. FOMO is rooted in scarcity mindset, the belief that there's never enough, not enough time, not enough opportunity, not enough winning trades. Flow is built on abundance thinking, the belief that the market is infinite, that there's always another setup, and that patience creates power. This inner shift is everything. Because when you truly believe that missing a trade isn't the end of the world, your brain relaxes. You stop rushing. You stop forcing. You start waiting and trading only when it's right. You become the hunter, not the prey. FOMO screams, "Go now." Flow whispers, "Wait." And the irony is, the traders who wait almost always make more. Because good trades don't reward urgency. They reward preparation. Your job isn't to predict or chase. It's to be present, prepared, and poised. And that's where flow begins. Mindfulness, the gateway to flow. So how do you actually enter this flow state more often? The key is mindfulness, being fully aware of what you're feeling, thinking, and doing without reacting to it impulsively. Most traders operate in reaction mode. A candle moves and their finger moves. Price spikes and they panic. A news event drops and they get sucked in emotionally. Mindfulness breaks this pattern. It creates a gap between stimulus and response. Instead of reacting, you observe. You notice your FOMO bubbling up, but you don't act on it. You notice your urge to enter late, but you wait anyway. You see the setup forming, but you breathe and confirm your rules first. In that moment of stillness, you reclaim control. You stop being a slave to your emotions. You become the pilot again. This is where flow starts, in the space between emotion and action. And that space is built through daily mental training. You don't need to meditate for an hour a day to get here. Start with a few minutes. Start with breathing. Start with awareness. The more mindful you become, the less noise controls you, the less fear drives you, the more trades you pass on without regret. And that's how flow becomes your new default. The myth of constant activity. Another reason traders fall into FOMO is because they think they always need to be doing something. Staring at charts, watching news, placing trades, hustling to stay ahead. But trading isn't about doing more. It's about doing less, better. In fact, some of the best traders take fewer trades per month than most beginners take in a week. Why? Because they know that constant activity isn't productivity. It's anxiety in disguise. They trust their edge. They wait. And when the market aligns with their plan, they strike. Then they walk away. This is the flow mindset, detached, deliberate, and calm. So ask yourself, are you trading to feel busy or to get results? If it's the first, you're still in FOMO. If it's the second, flow is waiting for you. Rewiring the brain, a new trading identity. Let's take it deeper. FOMO isn't just a trading issue, it's an identity issue. You've probably built an identity around being a fast decision maker or someone who's always in the game. Maybe you equate not trading with laziness, or you feel like if you're not doing something, you're falling behind. This identity creates internal pressure. It tells you that slowing down means failure. But what if you rewired your identity to something different? What if you saw yourself as the sniper, someone who waits patiently for the high probability shot? What if you saw yourself as the observer, calm, focused, unshaken? Your actions will always align with how you see yourself. So to move from FOMO to flow, you have to upgrade your identity. You have to see yourself as someone who values precision over speed, patience over panic, presence over pressure. When your self-image shifts, your behavior follows. Real-life flow, what it actually feels like. Let's paint the picture. You sit down at your trading desk. You've already meditated for 5 minutes. Your plan is clear. Your rules are visible. You're calm. You're not looking for a trade. You're watching the market unfold. You see a setup forming. It fits your strategy. You feel excited, but not rushed. You double-check your checklist. It still aligns. You enter. You breathe. You let the trade play out. No jumping in or out. No obsessively refreshing. You're detached, yet engaged. You know that win or lose, you followed your process. This is flow. It doesn't feel like adrenaline. It feels like alignment. It doesn't feel like gambling. It feels like mastery. And once you experience it, you'll never want to trade any other way.
Chapter 8. Risk like a pro. Smart risk management isn't fear, it's freedom. Imagine this. You're sitting in front of your trading screen. A potentially lucrative setup is flashing. The temptation to go all in is overwhelming. You tell yourself, this could be the one that changes everything. The heart races, the fingers twitch, but deep down a voice whispers, what if I lose everything? This internal battle between fear and opportunity is the core of risk management in trading. If you're like most traders, you've either been paralyzed by fear or blinded by greed. Either way, you've likely experienced how poor risk management can unravel your entire trading journey faster than you thought possible. But here's the truth. Risk isn't your enemy. It's your most powerful ally, if you learn how to respect and manage it properly. Risk is not something to avoid, it's something to master. This chapter is about teaching you how to risk like a pro, to shift your mindset so risk becomes a tool that gives you freedom, control, and longevity in the markets, not a source of stress or anxiety.
Why risk feels scary and why it shouldn't. Risk scares everyone because it's tied to loss. Losing money feels painful. It triggers survival instincts in the brain, flooding you with stress hormones and panic. This reaction is natural and universal. But the problem starts when we let this fear control our decisions. When fear dominates, traders either refuse to risk enough to make real progress or risk too much in a desperate attempt to win back losses. Both paths lead to failure. The key is understanding that risk is not loss. Risk is the chance that loss might happen. It's a probability, not a certainty, and it's manageable. Professional traders don't shy away from risk. They embrace it. They understand that risk is baked into every trade, but the goal is to manage it smartly so losses are limited and wins can grow. When you redefine risk this way, you stop fearing it and start respecting it. Risk management isn't about avoiding losses. It's about surviving losses and maximizing gains over time. The freedom mindset. Risk gives you control. One of the most powerful mindset shifts you can make is seeing risk management as a source of freedom, not fear. When you control your risk, you control your destiny. Imagine trading without the crushing anxiety that comes from risking too much. Imagine knowing exactly how much you're willing to lose on each trade and being comfortable with it no matter what happens. This is freedom. Freedom means you don't have to chase every trade to make up for losses. You don't have to stay glued to the screen, overwhelmed by worry. You can take a step back, breathe, and trust your system. When risk is managed well, you're free to trade with confidence and patience. This freedom isn't theoretical, it's practical, it's real, and it's the foundation for long-term success. How much risk is too much? This is one of the most common questions traders ask. How much should I risk per trade? The honest answer is, it depends on your personality, your capital, and your strategy. But there are solid guidelines professionals follow that you can apply today. Most pros risk between 1% to 2% of their trading capital per trade. Why? Because at this level, even a string of losses won't wipe out your account. It keeps you in the game. This low-risk approach might sound boring, it's not glamorous, but it's what separates serious traders from gamblers. When you risk 1%, you can lose 10 trades in a row and still have 90% of your capital intact. That gives you a chance to recover, learn, and keep trading. If you risk too much, say 10% or 20% per trade, just a few bad trades can blow your account. That's what we call account destruction, and it's the fastest way to quit trading forever. So start small. Risk what you can afford to lose, not what you hope to win. The power of the risk-reward ratio. Another essential tool in professional risk management is the risk-reward ratio. This ratio compares the amount you risk losing to the potential amount you could gain. For example, if you risk $100 to potentially make $300, your risk-reward ratio is 1 to 3. Why does this matter? Because having a positive risk-reward ratio means you don't have to win every trade to be profitable. You just need your winners to be bigger than your losers. If you consistently take trades with a 1 to 3 risk-reward, winning just 40% of your trades can still make you money. This simple math is a game changer. Many beginners focus on winning percentage alone, which can be misleading. It's possible to win 70% of trades but lose money if your losses are much bigger than your wins. So always think in terms of risk-reward. Make sure every trade has a justified potential upside that's worth the downside risk. Position sizing is your most powerful risk lever. Position sizing is how much you trade in terms of contracts, shares, or lots. This is the most practical way to control risk because it directly affects how much money you put at stake. Let's say you're trading stocks. If you risk 1% of your capital per trade, but you want to limit your loss to $50, position sizing tells you how many shares to buy or sell based on your stop loss. Position sizing requires discipline and math, but it's where theory meets practice. Many traders fail not because they pick bad trades, but because they risk too much on one position. If you want to risk like a pro, mastering position sizing is critical. Stop loss, your best friend. If risk is freedom, then the stop loss is your best friend. A stop loss is a predefined price where you will exit a trade if things go against you. It's an automatic safety net that prevents emotional decisions when the market moves unexpectedly. Setting a stop loss means you accept that losses are part of the game and you plan for them. Without a stop loss, you leave your fate to hope and emotion. You might hold losing trades hoping they turn around only to watch losses grow. Traders who risk like a pro always use stop losses. They set them strategically, not too tight to get stopped out by normal market noise, but not too wide to risk a big chunk of capital. This balance comes with experience, but the important part is you always have a stop loss. Emotional control. Risk is mental as much as mathematical. Risk management isn't just numbers on a spreadsheet, it's a mental game. You might know the perfect risk level, the ideal risk reward, and the right position size, and still fail to stick with it because of emotions. Fear and greed often hijack even the best plans. Fear can cause you to close winning trades too early. Greed can cause you to move stop losses further away, risking more than you intended. This is why mastering the mental side of risk is as important as the technical side. You must build emotional discipline and self-trust. You must believe in your plan enough to follow it under pressure. That's the difference between professional risk-taking and reckless gambling. The role of losses: embrace, don't avoid. Many traders see losses as failures. They beat themselves up and try to avoid losses at all costs. But losses are inevitable. Even the best traders lose on some trades. The difference is how they handle those losses. Risk management means accepting losses as part of the game, not personal failures. When you accept losses gracefully, you reduce stress, avoid revenge trading, and stay consistent. If you see losses as lessons, you'll improve faster and keep your capital safe. Building a risk plan, your trading insurance. To risk like a pro, you need a clear risk plan. This is your personal blueprint for how much you risk, how you size positions, when you set stop losses, and how you respond to losing streaks. A risk plan keeps you accountable and prevents impulsive decisions. Write it down, review it regularly, adjust it as you learn. Treat it like insurance for your trading business. Real-life example: how risk saved my account. Let me share a quick story. Early in my trading career, I was chasing big wins. I risked large chunks on what I thought were sure things. Predictably, the market hit stop losses and blew through my account in months. Then I learned risk management. I started risking only 1% per trade, setting proper stops, and focusing on good risk-reward setups. Sure, my profits slowed down at first, but my account stopped shrinking. I stayed in the game, and over time, my gains became consistent. Risk gave me freedom. Freedom from anxiety, freedom from desperation, and freedom to trade another day.